2022 was certainly a year that was full of surprises. COVID may feel like a distant memory to many, except that in the case of China, it was not. Investors spent the majority part of the year fretting about the economic impact of the country's harsh lockdowns. And perhaps the biggest shock of the year was Russia's invasion of Ukraine, or the existential crisis in the broader crypto universe involving the implosion of several high-profile firms that were involved in managing crypto investments for clients. To look back at the year, unpacking the surprises as well as the lessons, we are joined by Izak Odendaal, who is an investment strategist at Old Mutual Multi-Managers. Izak, thank you so much for your time. Going into 2022, I'm sure a lot has surprised you when you look back at the year. Let's touch on one key event that stands out to you.
Yeah, you mentioned a few. I think the biggest one probably is that we started the year quite optimistic about the global growth outlook and about, inflation being temporary. And then along comes the Russian war and a number of other events, the COVID lockdowns in China. And here we stand at the end of the year with a much weaker global growth outlook, with interest rates, I think, much higher than most people anticipated at the start of the year. Inflation being a big problem, although it is looking like it's peaked and starting to come down. And that all in all sets the scene for quite a challenging 2023. And then along the way, of course, as you mentioned, markets have been incredibly volatile, and you've seen a number of quite high-profile blow-ups, particularly in the crypto space.
So, you were talking about inflation there, and we had US CPI figures coming in, as well as the UK and South Africa. But let's hone in on that US CPI inflation. What did you make of those numbers?
Yeah, look, it's obviously moving in the right direction now, which is good news, and was better than the market expected, hence the positive market response. But it's way too soon to declare victory. And I think certainly from the central bank's point of view, they've made it quite clear that they want to see convincing evidence that inflation is not only falling, but that it's going to stay down. In other words, they want to see evidence from the broader economy that you don't have an overheating economy, an overheating labor market, and you don't have the kind of conditions on the ground that can lead to inflation flaring up again. Because, of course, at the moment, the oil price has come down quite a lot. That helps the inflation outlook in the near term, but nothing prevents that oil price from shooting up again, let's say, during the course of next year as China's economy reopens and maybe, there are more supply cuts coming out of the Russian war. So, yeah, they want clear evidence that inflation is going to stay low before I think they take the foot off the brake.
How are you viewing the China reopening story, and what are any concerns for you, if at all?
I think it's going to be gradual. It's funny because the pace at which they moved following these protests was surprising. You don't normally expect the Chinese government to give in to protesters on the street, but they have now made a couple of big announcements that'll certainly ease up the conditions for ordinary Chinese people. But I think to get to a point where you've fully put COVID behind you and all the restrictions behind you, that takes us into, sort of the first couple of months of 2023. I don't think it's going to happen overnight. And then, of course, the biggest question really is what kind of bounce do you get in the economy? Do consumers go out now and spend for all the months that they couldn't spend, or are they going to be cautious? Now, in a lot of other countries, you've seen consumers coming back quite strongly and really wanting to spend and really wanting to recapture some of the lost time and the lost fun that they had. But I think in China, there's also a good chance that a lot of people might be quite cautious, might be reserved, might be worried about what lies ahead. Of course, there are other issues in that economy relating to the property sector and so on. So it's not necessarily the case that you're going to see this huge bounce back from these lockdowns immediately.
So we touched on some of the surprises for 2022. What would you say were some of the lessons learned here?
Yeah, so there are a couple. The one is that economies are adaptable, market economies are adaptable. South Africa, we faced a record load shedding, much worse than any other year, and we managed economic growth. And in fact, we had quite a surprisingly strong number in the third quarter. So there's an element of adaptability and flexibility and resilience. And similarly in Europe, I think if you go back 6 months, some of the forecasts for economic growth in Europe, given the Russians cut off gas supplies, those have not materialized. I think even there you've seen a flexibility and adaptability to conditions. So that is one key lesson. Some of the other key things, I think, if you again specifically go back to the crypto that you spoke about earlier, I mean, there the message is just simply that there's that old story about when the tide goes out, you see who was swimming naked. And I think with a lot of these very speculative investments, unregulated investments, the tide is going out now, given high interest rates, given market volatility. And you're seeing now which ones were just completely speculative and unsustainable. And of course, the most high profile one of those was FTX. And we learned this morning that the founder of FTX has now been arrested in the Bahamas.
As we wrap up the year, just before I let you go, one key event that you think might be a risk going into 2023?
Yeah, I think the biggest risk from an investment point of view is that inflation doesn't fall, or doesn't fall as much as we want it to fall. And as I mentioned earlier, that means that central banks will need to maintain the pressure. And the market is not positioned for that. The market is positioned for inflation to come down nicely and quietly during the course of next year, and for interest rates to start falling in the second half of next year. And if that doesn't happen, then I think the market is going to be unsettled and potentially faces more headwinds.
Izak, thank you so much for your time. That is Izak Odendaal, who is an investment strategist at Old Mutual Multi-Managers. And of course, we do have that Fed policy decision later this evening, as well as the press statement. And the tricky part for Jerome Powell is going to be trying to balance market expectations and saying that perhaps even that 50 basis point isn't necessarily a Fed pivot as it has been described. But we'll unpack all of that for you tomorrow. That is it from me. Of course, we do leave you with Nompumelelo Siziba, so stay tuned.